Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Trader brokerage account. Today on the show, we're going to be showing you how to analyze earnings in the ORATS dashboard, and we're going to be covering Nvidia. Matt, do you want to share your screen and get us started?
Sure. It's a little bright. We got that nor'easter dumped on us, a bunch of snow, and now the sun's out, so it's very, very bright out. So yeah, so very exciting to bring you this update, Tyler. Thanks for all the hard work on it. So yeah, what we're going to be talking about is how we analyze a stock with earnings, and we feel it's ORATS is one of, if not the best platform out there. So sweet what we got so far. So we're going to be looking at Nvidia today. So again, our kind of new look dashboard. You go to, I have pinned tabs, and then there's under ticker analysis is the earnings and news. If you go to that a lot, you could always pin this tab, and it'll go to earnings and news, and you could unpin it if you want as well. I like to start. I always start here. I don't know if you're that into that or not, Tyler, but we have research, implementation, risk, and review. We've gone over a lot of these in past videos, but this is kind of a new way to look for things here. So it's exciting to have it. Earnings and news is under the risk tab. And so that's how you get to it that way too. So anything on that so far, Tyler?
Yeah, no, the welcome's a great place to kind of view all the tabs, and we're adding more stuff into there every few weeks too. So that's kind of a great way to keep on track with what we're doing. And I think, Matt, we could even add like an updates or a change log in there to kind of keep up with what we're doing. Maybe that would be kind of neat.
Yeah, and we've received great feedback. So if anyone wants to say anything positive or negative, we love the feedback. We very, very much listen to what you all say and implement it if we can. So yeah, let's dive in, Tyler. So this is our like I said, our earnings and news for Nvidia. We have 12 actual earnings dates, and then the next date coming up here. So and then we have, so these are graphical representations of the table down below. So what we're saying is there's an implied versus actual move. So the dots is the actual moves. That's what that means. And the implied is how far the stock is predicted to go by the option market. Again, ORATS is a very sophisticated way to calculate that. It's not just like the straddle, which is a good way, but it's a straddle, and then you have to figure out how much time is left in that near-term expiration that happens after the earnings are announced, and then you need to figure how much is left, simulate a distribution of how much the stock would move, and then what is the likely value of that straddle after earnings. Is that clear, or is it not clear, Tyler?
Yeah. I mean, the process is complicated, right? But we're trying to simplify it, and that's one of the things that you get when you subscribe to ORATS is these really kind of advanced proprietary calculations delivered into a summarized indicator, and implied earnings move is that indicator. So yeah, I think you explained it well, but yeah, let's keep kind of touching on those points throughout the show.
Yeah, so you could see that the earnings, the earnings is the 25th tomorrow. The at the money straddle is let's see here. Yeah, is the 27th. So that contains the earnings move. And so you can see how high this is, and then above the other, these dots represent the at the money implied volatility for each expiration. If you want to see it in more color than that, you could always go to the options chain and see these numbers actual here and how they've changed today. So that's a really good view of it right here, Tyler. But I like to, yeah, we could look at it here. So like these differences, because what's going to happen likely, and I like to look at this in the trade builder, if you look at it for longer, is the volatility will fall after these vertical lines. Because these vertical lines are the earnings are announced, and we tell you, oh, the actual was 9.3, the implied was 7.8. So that's in May, and you could go back to this one, and you could see, again, May, you could see how much the implied move was, and then what the actual move was here. That's the 8.5 down, and then we've recently added. Well, what was the implied move of the entire sector? And then we do, well, what's that ratio? So this is a very neat add. And you can kind of see how Nvidia versus the XLK. So XLK is the best ETF for Nvidia. XLK is the technology ETF. And you could see, for example, the median of all the XLKs was 4.6 in August of 23. So you could see that, like, how much larger Nvidia was at that time. Didn't move very much, but and then you could, so that's what all these kind of points are showing here. It's let's see, Control-2. So again, the implied move is here. That's this one right here. The actual move, this dot, is here. And then the new thing that we added is the sector implied is there. And the reason that we added it was you want to know what's going on in the market in general, because oftentimes, if there's a lot going on exogenously, like there is, now, you want to know, like, what's going on, with other stocks. How, like, is it going to be like a very big implied? So, like, for example, the largest implied move for the XLK happened back in August. And then in that date also, Nvidia had the largest implied. So that, that ratio kind of made sense there. As a matter of fact, that ratio of 1.7 was actually less than other ones that were coming up at the time. So that's why it's, I think, such a good indicator, Tyler. It sounds like you.
Yeah. Yeah. So when is there like anything to kind of glean from if it's larger or if it's smaller? Does that just mean it's typically more traded than the average stock? And I mean, Nvidia is, the largest market cap stock, and XLK obviously has a lot of stuff less than that. So does it just have to do with that, or is there something else we can glean from it, or is this sort of a new indicator we're still kind of learning about?
No, I mean, you could glean that the market thinks that there's something going on in the stock itself. Like, so, like it's, and that's important, right? So it's, there's systematic risk, and asystematic risk. But this is something where, when that ratio is higher than normal, the market thinks that there's something going on in that stock. And then what you can do now is you could check that out. Like, before you might just say, well, normally the implied volatility, the implied move is averaging 7.6%. It's 10%. We're going to sell it now, right? Like, but now you have another thing which saying, well, wait a second, every stock, is coming up higher this time. So you might want to be careful. Right.
Gotcha.
So, so you want to say, well, like you might not want to sell it in those times, or you could look at it and you could say, hey, was the market correct when they thought that Nvidia was going to move more in the past? Now you could get really you could really drill down into those types of when is it really a good time to sell, right?
Yeah.
When they when the ratio was low or the ratio was high, right? So we've given our clients another like factor to look at when they're looking at particular earnings. So I think it's really exciting to see.
Yeah, I like this new indicator, and I'm curious. What you just said will be interesting to analyze as we kind of continue to explore this. Kind of your first impressions of this indicator. How is this going to impact option scanning off the typical workflow for this is going to the option scanner after looking at some earnings visuals and deciding what you want to do. Can you walk us through that a little bit?
Yeah, so you're talking about scanning for so eventually, right, it'll be in the stock scanner.
Mm-hmm.
It's so new, it's not in here yet, but then you could scan for those types. Now what you could do is you could go like and see which ones go to happenings, and you could look at we have the top intraday movers today. It's early, you can see what's going on here, but then you could go down to earnings, like right, and you could see I love this visual because you could see, okay, today, like Tuesday, there's 102, tomorrow 165, Thursday 220. But look at how big Nvidia is. We scale it, by option volume. So Nvidia just dwarfs everything else. But you could see other stocks that are coming up, here, and you could go do that. You could go look at that at the the information. So if I click on that and go to earnings news for AS Space Mobile, I mean, this might be a little bit out there, but let's just try it anyway. So this is a stock that really moves a lot, like has some crazy moves. Yeah, it's so
5x. That's
yeah,
good.
yeah, 5x, right? So you could see, when it's crazy down here, what's going on now, but 14% implied move is pretty crazy, but you can still track it with this, like you could still see kind of what that average, it's usually 3 times the XLC. So it's a communication best ETF here. So it's a communication stock. And we should also mention that we've done a lot of work getting the sectors correct on these stocks and ETFs. No small task. We have to look up a lot of things and get them right. And so, we're proud of the work that we've done, getting the industry right and getting the sector right on all these. So it's very cool how this goes. And you could see by mousing over what the stock does, just to make sure that that we got this right, which hopefully we've done. So that anyway, that's one of them. I could go back and see if there's any that Marathon is another one that you could look at. Core Wave, Wolf, Core Scientific. What is this? So this is rocket companies. This might be kind of interesting to look at. So you click on it, and then you click on earnings and news, and then you could then you could see, okay, well, here are the implied moves. Here are where the XLF was. So Rocket Mortgage, again, you could is a a mortgage and personal finance. Ricky Fowler won the Rocket Mortgage golf tournament. So a little bit of trivia for you there. But anyway, so you could see Rocket Mortgage, the implied sector ratio is 2.5, and you could then go look back and when was it high, when was it low, did it pay off or not, right? So that's kind of how I would use this type of analysis that we have in there now. So it's very cool.
All right, cool. So is there any particular option strategies you would use when it's higher versus when it's lower? Like, would you, tend to sell or straddles or buy straddles, or and how would you do that?
Yeah, I mean, you obviously have to be careful. Like in a rocket, it looks like it's pretty high so the next earnings is February. So you could either look at the chain, and see, okay, well, how does this look? And so it's coming out the day before, right? So what are you going to do? So how much is it going to move? 10%, in a $17 stock is $1.70, and the straddle is, right around there, right? So, I mean, you could, I would do something like, if you really don't think it's going to move that much, you do some type of like, iron condor, for example. You could sell the meat and buy the wings. Always buy the wings. So 2 points down, and it's great how this works. And then 2 points up is 19, and so now you have a nice iron condor here. You could view it in the risk page, which is awesome, and you can move these around. So it's just like, what do you think, right? So is it going to go? Rocket Mortgage right now is 16.8. You can make, in this small trade, you could make $130 if it closes between here, and you could lose $68 if it goes outside of your strike at 14.5 or 19. So that might be, something that you would be interested in. We could put that trade on as a paper trade.
So I kind of want to stick on the risk profile for a minute. It's this big. It's a great new way to visualize your risk for things. It's actually something we added in the last few weeks. Do you want to show the? Yeah, exactly. Is there any way that you're using that to sort of trade earnings a little bit smoother, or we have this IV, adjust IV and DTE for each leg, and I think it can really help with calendar trades and maybe even earnings trades. I don't know. What are your thoughts on that?
Yeah, I mean, it's cool to look at and such, but for an earnings trade, it's kind of a binary, right? Like you're just guessing, like how it's going to do, by this time. But the cool thing that you could do is, earnings are the 26, right? So after, so you could go, you could simulate it out here, right? And then you could simulate, the volatility coming down, so that's really cool to be able to do, right? So, vol might come down, way, way, way down, right? So it's likely going to do that. And then, what you could do is to see how, see what that payoff is like, so that's a nice thing to be able to do. Like after, I guess I should put it back one day because that is expiration there. But and then you could kind of see, you could see, how this looks after that day. So you're going to be able to collect quite a bit, is what this is saying, if it ends up in between there beforehand.
Gotcha. Yeah. So I mean, yeah, that's one way to kind of look at it. So you're saying it's more helpful for calendars and stuff like that.
Well, no, this is helpful. Like this is great. But yeah, calendars are harder to, excuse me, are harder to visualize. So this is why a calendar is good, because you could adjust both volatility separately and see what happens. So that's really cool. But for an earnings, it's kind of nice to be able to like see what happens if the vol comes down. So that's super important.
Yeah, well, I think the reason I mention it was because I hear a lot of traders like doing the post earnings volatility crush that happens afterward, and if you're kind of comparing it to the sector IV and kind of if the IV is overvalued or undervalued, and that maybe that's too much for this particular show, but yeah, that's kind of why I brought it up.
No, I think it's a great call because that's what we're talking about. We're talking about earnings, and I mean we could do Nvidia too, and see how that looks. But I've moved volatility way down, and you can see what it's doing is it's approaching the terminal payoff. If there was no volatility, that's you'll get what the intrinsic, which is basically the hard lines, but the soft line, the purple, is where it is, at expiration, or sorry, before expiration. In this case, we've set it to 3 days, and then we put the volatility down. If the volatility were up, then you're not going to make very much because there's going to be so much volatility in the shorts here. But as you get the volatility out of it, you'll start to make more money, because you can see what the Vega is. You're short Vega. So what that means is if the Vega goes down, you're going to make money. So that's what you want it to not move in Vega to come down, and that's where you make the most, because you're short gamma. Delta's not as important.
Right. That makes sense.
Yeah. So that if you really are because you're kind of betting in that case, you're betting on earnings to not move too much, right? And vol to come in, and you could get out the day before, or you could hold it, and see what happens as well. Yeah. So that's Rocket Mortgage. And we could look at Nvidia as well. And there's no strategy here, so what we might want to do is go to the ticker analysis, go to the options chain, and again, you can pin this tab too, because I go to that quite a bit. So Nvidia, we could look at that as well. I happen to think that this doesn't look like it's that jacked up, so to speak. So what that means is, I think February 27th might be, might do a reverse iron condor, even for Nvidia, or
interesting.
Yeah, or something. You can't, it's hard to do a reverse calendar, but I think these are kind of, I actually think these are kind of high. So if I were going to sell something, it would probably be a farther out date, that are relatively high. And the reason I say that is because, that the way that we get what the implied move is going to be is by looking at the straddle, but also you can kind of look at what the relationship is between the straddle and the next month out straddle. And in this case, usually you'll see it kind of hockey stick more, meaning the front month's a lot higher than the back month. And so that might have a much different kind of implied move in a sense. If that's a little bit technical, but but there's a lot more. There's a State of the Union address. There's a lot of stuff going on in the macro environment, which is why, and Trump's going to probably talk about about semiconductors and tariffs and everything. So that's why the whole market is pretty jacked right now. So it's there's a lot going on, but anyway, so there's a lot going on out there, which is why adding these additional data points is important. So we could check, you could kind of drill down one more level in earnings and see if Nvidia is high compared to where it is usually compared to the overall kind of sector that it's included in. So I don't know if it seems to me, it seems a little low, right? But
yeah,
the average actual moves is 7%. So again, to me it seems like if I were a betting man, and I am, I'd probably bet it to move a little bit more, which would be either a straddle, but those get expensive, or you could do a reverse iron fly or a reverse iron condor. So you're, instead of being short the meat, you're long the meat, short the wings. So that might be a way to play this.
Nice. All right. Yeah. Yeah, and you can see at the top there if it's reporting after or before market hours, and
Right.
you can also see I think we have the history of it too. So it's been
Yeah.
reporting after for the last.
Yeah, it's going to be after, and it's confirmed. So those are important data sets. We pay a lot of money for that, so you should look at it.
Great. All right, and yeah, you can send a trade off in paper trading too, right? And
Definitely. And also, this data is accessible in our APIs. Like, we don't say it exactly, but you could go. There's an XLK_C that is in the API that you could pull up and get what the average is. So if you just want to do this programmatically, you could also use these data points. A lot of our tools, we build all our tools on our API, so you could get these. We have a ton of data clients that come in and just get all this, via API, RESTful APIs. So that's available too.
All right, great. Well, thanks, Matt. Yeah, I think this is a great new indicator, a great new addition to the earnings tab, and we're continuing to add stuff every week. So keep checking back in and checking us out, and it's great to have you, Matt, kind of showing off the tool and the indicators. And yeah, anything else, Matt?
And to have you be able to present it so well. So it's we're a good team, Tyler.
All right, awesome. Thanks, Matt.
Yeah.
And thank you, Tradier, for hosting us week after week. It's a great place to show off the platform and help traders kind of learn what they can do better and give them more tools to make smarter trades. So, all right. If you have any comments, please feel free to comment in the video. And you guys can also ask questions during the live show, and we'll make sure to check those out if you guys do. You can email support@orats.com if you have any technical questions, and usually Matt or I or another member of our team will respond within a day. So it's a great way to get your questions answered. We also have an AI chatbot in the top right corner of the dashboard and website if you have any questions about some of the tools in the dashboard. Great. Well, unless there's anything else, Matt, we'll be back again next week. And thanks again.
Thanks, Tyler.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.